Good morning and welcome to today's episode of our Daily Crypto News Podcast. I'm joined by my co-host and we've got a packed show for you today. We're going to dive into some major market-moving stories and explore their implications for the crypto space.
That's right. Let's start with the big news out of Europe. Backpack, the parent firm behind the popular Mad Lads Solana NFTs, has just acquired FTX Europe. This is a significant development, and we're already seeing the impact on the markets.
Acquisition includes FTX EU's MiFID II license, which is a huge deal. For those who may not be familiar, MiFID II is a regulatory framework that governs financial markets in the EU. Having this license will allow Backpack to operate a regulated exchange in Europe, which is a major step forward for the company. And it
looks like they're wasting no time. Backpack has already announced plans to return customer Euro funds on behalf of the FTX estate and roll out a full suite of spot, margin, and futures trading products. This is going to be a big deal for crypto traders in Europe, especially with the return of crypto perps trading.
Absolutely. This acquisition is a significant vote of confidence in the European crypto market, and it's likely to have a ripple effect throughout the industry. We'll be keeping a close eye on this story as it develops.
Speaking of ripples, we've also got some big news out of the Ripple camp. Ripple president Monica Long is saying that an XRP ETF could soon be a reality. This comes on the heels of the RLUSD gaining traction, and it's got a lot of traders excited.
An XRP ETF would be a huge deal, especially given the recent optimism around a potential crypto-friendly Trump administration. Since November, we've seen a lot of speculative optimism among traders that a Trump administration could benefit tokens and products linked to US-based companies.
And it looks like Ripple is positioning itself to take advantage of that trend. Long said that the company thinks the approvals of those filings will accelerate, especially with the administration change. This could be a big opportunity for XRP and other US-based crypto companies.
We'll be exploring this story in more depth later in the episode, but for now, let's just say that an XRP ETF would be a major development for the crypto space. It would open up new opportunities for investors and traders, and it could help to drive further adoption of crypto assets.
That's right, and it's not just about XRP. A crypto-friendly administration could have far-reaching implications for the entire industry. We'll be discussing the potential implications of this trend and what it could mean for the future of crypto.
As we were discussing in our previous segment, Bitcoin experienced a significant drop in value after the release of mixed U.S. economic reports on Tuesday. And it's not just Bitcoin that felt the pinch. The entire crypto market has taken a hit, with some meme coins faring worse than others.
That's right. If you take a look at Dogecoin, for instance, it's down 10% in the last 24 hours. However, other meme coins like the Solana-based Dogecoin's Bonk are experiencing even more significant losses. I
find it interesting that Dogecoin is being hit harder than some of the more established players in the market, like Ethereum and Solana. What do you think is driving this trend?
It's likely due to a combination of factors. For one, meme coins tend to be more volatile and susceptible to market fluctuations. Additionally, investors may be becoming increasingly cautious and choosing to divest from riskier assets like meme coins.
That makes sense. Building on what we discussed earlier about the impact of U.S. economic reports on the crypto market, I came across an article that suggests a key market dynamic is shifting. Apparently, the MOVE index, which represents Treasury market volatility, is on the rise. And so MOVE is on the rise.
Yes, I've seen that report too. It's suggesting that this increase in rates volatility could lead to tighter financial conditions, which in turn may result in deeper losses for both Bitcoin and the S&P 500.
Exactly. And what's interesting is that the MOVE index bottomed out in mid-December, which coincided with the exhaustion of the uptrend in Bitcoin and stocks. This could be an indicator that the market is indeed shifting.
It's also worth noting that the crypto market is notorious for its rapid pace. If this trend continues, we could see significant changes in the market over the coming days and weeks. Investors will need to stay vigilant and adapt quickly to these changing conditions.
Speaking of adapting, it'll be interesting to see how investors respond to this shift in market dynamics. Will they continue to invest in riskier assets like meme coins, or will they opt for more stable options?
Only time will tell, but one thing is certain, the crypto market is always full of surprises. We'll continue to monitor the situation and provide updates as more information becomes available.
In the meantime, we want to hear from you, our listeners. How do you think the crypto market will respond to this shift in market dynamics? Share your thoughts with us on our social media channels.
And don't forget to tune in tomorrow for more in-depth analysis and discussion on the latest developments in the world of cryptocurrency.
We were just discussing the ongoing debate over the potential for the current crypto bull run to continue, and now we have some significant developments to consider. Bitcoin has broken the $100,000 barrier once again, largely driven by optimism surrounding the Trump inauguration. This surge has also led to a substantial influx of investment in Bitcoin ETFs, with a staggering $1.9 billion inflow over just 2 days.
That's a remarkable figure, and MicroStrategy is clearly confident in Bitcoin's prospects as well, having just purchased an additional $101 million worth of the cryptocurrency. It's also worth noting that the Coinbase premium for Bitcoin has turned positive, which could be an indicator of increasing demand.
Bernstein is now predicting that Bitcoin could reach as high as $200,000 in 2025, which would be a truly monumental milestone. Meanwhile, Arthur Hayes is forecasting that the crypto market will peak in mid-March, so it'll be interesting to see how events unfold in the coming months.
Another interesting aspect of the current crypto landscape is the performance of Solana. Its 24-hour DEX volume has actually surpassed that of Ethereum and Base combined, which is a significant achievement. There's also a proposal underway to address Solana's scalability issues, and the Hype to Sol bridge has just gone live.
In other news, Backpack has acquired FTX, which could have significant implications for the crypto exchange landscape. But I'd like to shift gears slightly and discuss some exciting developments in the world of AI. Nvidia has just made some major announcements at CES 2025 with a focus on AI agents.
That's right. Nvidia's CEO Jensen Huang took the stage to unveil a range of new products, including personal AI supercomputers and next-generation gaming cards. But the biggest announcement of all was probably Project Digits, a $3,000 personal AI supercomputer that could potentially revolutionize the way we interact with AI. And so,
it's clear that Nvidia is committed to solidifying its dominance in the fields of AI development and gaming. And speaking of innovative projects, the Pudgies have just hit $100,000, which is a remarkable achievement for the NFT market.
Indeed, it's an exciting time for crypto and AI enthusiasts alike, with new breakthroughs and developments emerging on a daily basis. We'll continue to monitor these stories and bring you updates as more information becomes available.
And finally, we should mention that CryptoQuants is suggesting that the current crypto bull cycle is entering its final stage. Whether or not this proves to be the case, it's clear that we're living in a time of great change and innovation in the world of cryptocurrency.
Absolutely, and we're excited to see what the future holds. We'll be back with more news and analysis after this break.
Continuing on our previous discussion about Bitcoin's recent price slump, it seems Elon Musk is weighing in on the conversation, albeit indirectly. The billionaire entrepreneur recently expressed his admiration for Canada's opposition leader, Pierre Poilievre, who's known for his pro-Bitcoin stance.
That's right. Musk shared a video of Poilievre explaining the importance of reducing government spending to combat inflation, a topic Musk has been vocal about in the past. It's interesting to see him show support for a politician who shares his views on fiscal policy and cryptocurrency.
Building on what we discussed earlier about market trends, it seems Dogecoin is feeling the effects of Bitcoin's slide. The meme coin slumped 10% in the past 24 hours, with Bitcoin dropping from above $102,000 to nearly $96,000.
Yes, and that drop had a ripple effect on the market. Crypto-tracked futures betting on higher prices saw $560 million in liquidations. However, some market watchers are optimistic, saying that these dips often pave the way for bigger bullish movements, especially considering where we are in the market cycle.
Speaking of market cycles, January is often seen as a shaky period for cryptocurrencies. Do you think we can expect more volatility in the coming weeks?
It's possible. Historically, January has been a month of corrections and consolidation for the crypto market. However, with the current macroeconomic landscape and institutional investment on the rise, it's hard to predict what will happen next.
That's a good point. The relationship between traditional markets and cryptocurrencies is becoming increasingly intertwined. Perhaps we'll see a more nuanced response to economic indicators and policy changes in the future.
Absolutely. As the market continues to mature, we can expect to see more complex interactions between different asset classes. For now, it's essential to keep a close eye on market trends and regulatory developments to stay ahead of the curve.
Well, we'll continue to monitor the situation and provide updates as more information becomes available. In the meantime, let's take a look at some of the other stories making headlines in the crypto space.
Sounds good to me. What's next on our radar?
To wrap up today's episode, I want to revisit the topic of Ether's potential to outperform Bitcoin in 2025. We touched on it earlier, but I think it's worth diving deeper into. What are your thoughts given Ether's 53% gain in 2024 compared to Bitcoin's 113%?
Well, I think it's essential to look at the bigger picture. Although Ether trailed behind its peers for most of 2024, its recent performance shows promise. Crossing the $4,000 mark in December, albeit below its all-time high, is a significant milestone. It seems like Ether has finally joined the rally sparked by Bitcoin's record-breaking climb.
Exactly, and that's why many experts believe Ether could lead the charge in the new year. What do you think is driving this optimism?
It's likely due to a combination of factors. For one, Ethereum's network upgrades and the growing adoption of decentralized finance applications have laid the groundwork for increased usage and subsequently a higher price. Additionally, Bitcoin's success often has a trickle-down effect on other cryptocurrencies, and Ether is well-positioned to capitalize on this momentum.
That's a great point. Now, I'd like to shift gears to the news about U.S. CFTC Chair Rostin Behnam's departure. What implications do you think this will have on the regulatory landscape, especially given that SEC Chair Gary Gensler is also stepping down on the same day?
The simultaneous departure of two top U.S. markets regulators will undoubtedly create a power vacuum. It will be interesting to see who fills these roles and how they approach cryptocurrency regulation. The lack of clear guidance has been a significant challenge for the industry, and the new appointees will have a substantial impact on shaping the regulatory environment.
Absolutely, and this uncertainty could lead to market volatility in the short term. However, it's also an opportunity for the new regulators to take a fresh approach and provide much-needed clarity.
That's right. As we look ahead to 2025, it's essential to keep a close eye on these developments and their potential impact on the market. In terms of key takeaways, I think it's clear that Ether is gaining momentum and could be a cryptocurrency to watch in the new year.
And on the regulatory front, the departure of Behnam and Gensler will undoubtedly have significant implications. As we close out today's episode, what's your market outlook for the coming weeks?
Given the recent rally and the potential for regulatory changes, I think we can expect some consolidation in the short term. However, as the market adjusts to these changes, I'm optimistic about the long-term prospects for cryptocurrencies like Ether and Bitcoin.
Well, that's all the time we have for today. Thank you for tuning in, and we'll be back tomorrow with more news and analysis from the worlds of cryptocurrency.